What would be the case, if you could make the case for buying bonds here at these levels? Or what level would you suggest people should get long bonds?
So I think it's very fair. What you're saying is definitely a fair point. On the other hand, I would say that most institutional investors, retail investors are massively underweight bonds. I'm not suggesting going massively long here. We were short and we did go neutral over the last several months, and we're slightly long right now. But I would say that that range that I'm talking about, in anticipation of a rate cutting cycle, albeit shallow, and I don't anticipate that this is going to be the rally to end all rallies, I see some point in actually diversifying. Fixed income ideally plays a diversification role in portfolios, and I think that's really the case to be made to hold treasuries. When I talk about it being shallow, the reason is I think over the longer term, it is inevitable almost that we see treasuries moving systematically higher for a while. So we might see them come down, and I don't expect them to rally all the way down to 2%. I don't expect the Fed cuts to take us to 2%, and certainly treasuries aren't going to rally anywhere close to what we've seen in the last 15 years. But then we will start seeing the sell-off which comes from the fiscal pressures, which is going to go on for several years, I would anticipate. So it's a period. It's a short cutting cycle. I think that's really important to think about.